Hello. How's everybody doing? So I hope everybody's having an awesome weekend. This is 50 pips, rocking and rolling here, 12th of April, 2015. Not making any trade calls or recommendations because you and only you're responsible for the trades you may decide to take. And the fact you're listening to this means you've read, you understand, you accept all the disclosure disclaimers on the blog, understanding that we're just performing some technical analysis in a learning context for educational purposes only. So, what's going on? Basically, here going into this week, which should be an interesting week, a lot of people have been asking me if I could look at cable in a bit more detail, right? It seems to be you know, some people are a bit confused. Some people think this was an easy call. I think it's been pretty tricky in terms of the action. I mean, action in general in terms of a lot of low liquidity chop these past weeks, but as the market's waiting for some kind of catalyst. But what's going on here on cable? So first of all, let's just start with the weekly chart or the way we're looking at this. So the last leg we had a pretty aggressive failure here from a high range, from a pretty pure cyclical high range here, which came back down. It tried to base here in mid-range. You see we've got one attempt here, nice little reversal on the weekly right at this 100 weekly moving average. Then we broke down what looked like possibly a fake out. Let's make this a bit bigger, right? This was the first attempt. Here we broke lower, then we had this very aggressive close here. It looked like possibly a fake out here and that we're going to try and rip back up, but bam, pressure's still on all the way back down into these lows. Now, once we got here at these lows, guys who watched these outlooks probably remember we're saying this was our favorite play. Our strongest conviction play on this move back down, you know, getting long cable at these 150s here, you know, with safes. Basically our line in the sand was the 148s for a rotation back up, ideally into mid-range. You know, nobody has a crystal ball, but we expected a decent bounce here. So we got a very nice bounce here. This was probably 500 pip bounce. And then we came back into the first big structural previous support that acted as resistance. You can see it on a daily very nicely, right? So basically we saw here basically a lot of basing action try to break down, and this was a very aggressive move. Price comes right back into previous support acting as resistance, and bam, all the way back down. Now clearly once we move back down after this failed attempt, so this sell-off here, this is a much lower odds long. This is not a place where you want to get aggressively long. So what we said here is when we came into this area, we said, okay, this is still an interesting zone. The 150 to the 148, it's a key zone, and we're looking at the zone as weekly closes above the 150, bullish for possibly some kind of rotation here, some kind of bottoming action, maybe catch a lot of people off guard. But if we close back below the 148s on the weekly, then we'd expect this to hold very heavy, and we'd expect to see a very quick move all the way back down into the 144s. Right? Then what happened is basically that FOMC happened on the 18th of March, if I remember correctly, and which kind of threw a spanner in everything because we had very aggressive action. That was the day where Euro put in the second biggest widest daily range since inception, right? And once we put that in, it's been very choppy, right? And what we like to say is much to do about nothing, because we've been consolidating or chopping, moving very quickly inside the range. Even though the velocity has been pretty aggressive, it was still inside those ranges, right? Now on the weekly, as long as we close below the 148s, this is heavy. So normally speaking, this should be pretty heavy. The way we'd read this chart is this is a heavy close. You'd probably expect to see sellers on a pop back into the 148s for this to continue back down and move and test this lower support zone. I think a lot of people have targets down here. Now, I'm going to go into another chart to show you why I think this is not such a clear-cut deal, simply because we have to factor in what we always call and what we go about, which is the context, right? So it doesn't mean it's not bearish. It's just we feel it's still pretty tricky, right? And the reason we feel it's tricky because we'd expect to see a lot of choppy tape into the elections. There'll be a lot of possible tape bombs and a lot of wheeling and dealing across the board in what feels to be, again, fairly low liquidity chop. Now, What made it quite tricky for us is that if you look at this chart, basically what happened right here, we've got that 150, 148. And so we said this is the chop zone on the weekly, right? Close above bullish, close below bearish. So that's fairly clear, right? Should be fairly clear. We look back on the weekly, the action, you don't need to be a rocket science. You see there's a lot of structural levels here, so this should be a pretty good guide. But the problem is, once the FOMC happened, what happened on the same day? You see what happens here? We were trading below, we rip back up, we print these 150, 160, so well above that 150 high range. Then we back down, we printed 146.34 as well below that 148, and then we ended up and we close inside. So what happened right after that FOMC? So clearly the action, we see a lot of people talking about the fact that we kept on making positive daily closes and higher highs on the daily, higher lows on the daily closes. Everybody said this has to rip higher. And the way we looked at this is a range inside a range. So it's very tricky to call this, and we're not in the favor of looking at any kind of shapes inside the zone. I just put this on because a lot of people were asking me about it. And even though you get a break above the 150 or below the 148, it doesn't mean a lot. It doesn't mean a lot as long as we don't comfortably trade outside, either to the upside or the downside of this FOMC range. So the only thing you could do, or at least we're focused on reading this intraday post that FOMC, is not too concerned with any kind of breakout here, and we're just focusing on what's happening inside this area. Now, the only thing that seemed fairly clear to us in terms of action following that FOMC was the fact that as we traded below the 148, the market was uncomfortable attracting new sellers below and just didn't feel comfortable holding below that level. So all these repeated attempts here to break lower, you see all these wicks closing back above, gave us a good indication that this still hadn't finished the upside pressure. And if we were going to fail, we'd probably have to fail back from a higher level. So right here, the market very clearly showing us, telling us that the market is uncomfortable holding below that level on a daily close, unable to attract new selling, and bam, we move back up into those highs. No reason to get excited again because we're still range inside the range. We never trade back above the 150, and a lot of selling opportunities back into those high range. So as long as you're trading here, the only thing we're comfortable with is buying failures at low or selling failures at highs. But it's very tricky because it's a range inside a range. Now, normally the fact that we've broken back below that FOMC should be very, very bearish. And if we look at it on that weekly, we said, yeah, bearish because we closed below the 148, right? However, we pierced below and we couldn't hold below on Friday trade. So this still gives us, just makes us think we need to be a bit cautious here, and it doesn't feel like it's a done deal to the downside. What that means is, as far as we're concerned, we would not be surprised to see this trading back inside this range and staying inside this range pretty much in all this election chop, unless something substantial happens, if we get something out of the Fed, out of the ECB, whatever, right? Unless we get something material changing the way the market is pricing things in, especially, vis-a-vis US rates, etc. So right now, going into the open on Sunday, what we would expect here is if we trade aggressively below and the market tries to take some stops out below those lows and can hold traction below that FOMC low, then it would not be surprising to see that acceleration back down and try and print those 144s relatively quickly. But if we go into Monday trade, right, into Sunday night trade and into Monday, and we don't see any aggressive trading or traction below these FOMC lows, then don't be surprised to see this try to move back into those 48s. You'll probably see some sellers, but even just move back and hover in this zone, waiting for the next round of US data or UK data to try and make a bit of a better assessment on what to do next. So again, a lot of people writing to me saying they were a bit confused by the action. I think the action is far from extremely clear right? I think there's been a lot of choppy action. I think there have been some very interesting trading opportunities, but globally, from a bigger picture, it doesn't seem that clear. Also, because we still have to factor in, all this latest round of US data, all this latest round of election risk, possible tape bombs on the wire. So again, let's see what happens. Those are the levels we're looking at. I'll try and post those two charts on the blog. If anybody's interested in anything else, just send me a note on the blog and I'll try and tackle it in the next video. Have an awesome one. Thanks for listening. See you guys for London Open, guys. Take care. Bye-bye.